and welcome. I'm Prerna Deshpande, bringing you markets and macros. Let's jump right into the top 3 things to watch out for today. First up, we have the big meeting which concluded yesterday between Indian Prime Minister Narendra Modi and US President Donald Trump at Biarritz, which saw a number of key developments unfold with regards to the bilateral trade relations between India and the US. The Prime Minister has informed Trump reportedly that India plans to shore up its imports from the US, including oil imports. The Prime Minister has further stated that India already has $4 billion worth of imports already in the pipeline. These developments are of course highly significant given the ongoing tensions between India and the US over a host of trade-related issues. PM Modi is also scheduled to visit the US next month in September to attend the United Nations General Assembly session. During his visit, PM Modi will also be traveling to Houston, which is of course America's energy capital, in order to meet up with the CEOs of top energy companies in America. Modi is expected to hold a roundtable with these CEOs in order to discuss how to ramp up India's oil imports and also the prospects of increasing India's investments in America's oil sector. Now this, combined with the rollback on the FPI surcharge announced by Finance Minister Nirmala Sitharaman, is definitely likely to perk up investment as well as stimulate economic growth. Given the global volatility in trade as well as the global slump in oil prices, these developments in the India-US bilateral relations is definitely likely to boost overall sentiment and reflect favorably on the markets today. No surprises then that the Sensex got off on a high note at opening bell today and is continuing its positive run. Next up, we have the big announcement from the Reserve Bank of India. The central bank is set to transfer rupees 1.76 trillion to the government in the current fiscal year. This announcement comes as a part of the recommendations made by the Bimal Jalan Committee. The Central Board of the RBI has accepted all the recommendations made by the committee as a part of the revised economic capital framework. The capital transfer will include a 1.2 trillion surplus for 2018-2019, as well as a 52,637 crore of excess provisions. The total amount is 86,000 crore rupees more than the 90,000 crore that was budgeted for this year. This additional bonanza for the government comes no doubt in lieu of the overall economic slowdown. The government is expected to use the bonus amount also possibly to meet the shortfalls in revenue collections. The fiscal deficit target has also been revised to a 3.3%, down from a 3.4% earlier of the GDP of the current fiscal year. The announcement has sparked renewed hopes for a turnaround on the dragging economic growth and is also likely to reflect positively on the markets today. The third and final aspect to watch out for today, the rupee. While the Sensex shot up by over 8,000 points or 2.2% yesterday, post the announcement made by Finance Minister Nirmala Sitharaman over a host of economic measures for boosting the economy, the rupee noted a sharp fall of up to 40 paise against the dollar to reach the 72.05 mark. Now what's interesting here is that the rupee or the currency, of course, normally follows the movement of the stock market. Yesterday, however, was a different story, as we had the Sensex on the one hand taking a big leap, while the rupee crumbled under pressure from global markets on the other hand. The global markets remained cautious and even pessimistic over the escalation of the US-China trade war over the weekend, as the Chinese renminbi tumbled down to a new 11-year low of 7.15 against the US dollar. Majority of the emerging market currencies also felt the heat, including the rupee, and noted steep falls. The Chinese government has of course allowed the renminbi to free fall deliberately because a weaker yuan means that every dollar can purchase larger quantities of Chinese imports. Another curious aspect here is that such a sharp downslide in the rupee has in the past evoked immediate intervention from the RBI, which has this time around avoided intervening as of yet. It's going to be interesting to observe the trend of the rupee as the day and the weeks progress, as well as the steps that the RBI might take to mitigate any such fluctuations in the rupee. That is all for today. Do let us know your thoughts on these economic trends in the comment section down below. This is me, Prerna, signing off. Thanks for joining in.